Urgent crypto alert, Bitcoin's fate hangs in the balance, spot ETF investments and impending mining changes fuel a surge, but whispers of an imminent flash crash circulate. Brace yourselves for a rollercoaster ride in the crypto realm. Run, run, run. Don't forget to subscribe and share, and let's start. And we're starting off with, I use high block heat maps and liquidation levels for my Bitcoin analysis every day, and let's learn how to use them in just 2 minutes. To anyone who has no idea what heat maps and liquidations are, let me start explaining. Usually leverage trade stops and liquidations are positioned behind a support or resistance. As a result, there are numerous stops and liquidations at specific areas. This is liquidity. Whales can swiftly and without affecting the price open position since billions are concentrated there. These levels can additionally place a lot of pressure on the one side of the order book, which could result in the price being reversed. So these zones are shown on heat maps. The more billions the zone, the brighter the color. There are heat maps for the short, intermediate and long-term trends in a variety of time frames. Now let's get to the liquidation levels. The new positions and their liquidation levels are displayed by the bubbles on the chart. Bubbles get large as the positions get larger. As you can see at the bottom, various colors refer to different leverages. So the amount of the unhit liquidation levels is displayed in the liquidation profile. The locations increase with the size of a spike. So the cumulative liquidations levels, delta, is demonstrating the gap between the short and extended liquidations. So whichever side has the more liquidity and is indicated by the delta, the price is probably going to shift in that way when the differential is really big. Next up, Warren Buffett is missing Bitcoin at $600 exactly 10 years ago. Ever since, Bitcoin is the world's best performing asset and up over 10,000%. Also, I had a lot of comments yesterday about the Bitcoin being boring this weekend. Well, we just had nice moves, so it's only normal to chill, but in general, Saturdays are almost always slow volume, boring as shit, and great days hang with friends, family, touch grass as they say. Sundays and the fun days when it comes to Bitcoin, up we go until proven otherwise. 57,100 is the next level probably we're going to dump. Let's see if it plays out like that. The next one, Bitcoin price could drop to 42,000 after the halving in April per JP Morgan. Also, Bitcoin looked like it was heading for a new all-time high on a Wednesday until Coinbase acted like a circuit breaker. Did Coinbase do someone a favor? Was someone's short getting blown out as Bitcoin rocketed from 57,000 to 64,000 in a matter of hours? Who knows, but what we do know is that it took $1.1 billion worth of GBTC selling to keep the price flat on Thursday and Friday. So Bitcoin is once again in a horizontal dip, and a pattern that sidelined fiat back holders are painfully aware of. People have been waiting to buy a significant pullback since we were in the $20,000 range, but they've all been left in the dust, and only hodlers have enjoyed every upward thrust so far, and meanwhile bears are praying for a crash, but they're looking more pathetic by the day. And if $1.1 billion worth of GBTC selling over 2 days can't even move the price down, what hope do they have? Let's not forget the major wirehouses that are about to come online: Morgan Stanley, Wells Fargo, Merrill Lynch, and UBS. So they'll be bidding for the Bitcoin scraps soon. And that's before we consider the foreign demand from the Hong Kong ETFs that will launch later this year. And we're in early stages of a fundamental repricing of this asset, so many will sell too early as they stare at the charts based on a historical period where a tiny fraction of global capital had access to Bitcoin. Chart jockeys, graph gurus, and line whisperers who ignore the fundamental change in demand are most in danger. They are likely to end up holding a rapidly devaluing sack of fiat as Bitcoin teleports higher without them. So the game has changed. The boomers are here in earnest, and they are buying IB at $35 per share because they think it can go to $500 per share, and they are probably right. The next one we go for. Last cycle, whenever Bitcoin broke above the 0.618, it reached the 161.8 within the matter of a few months. It can all happen extremely quick. Just get prepared for it. Studying Bitcoin is the smartest thing a person can do at the moment investment, and in case he is interested in his finances, here's the visualization of 79 books recommended by me to read. "I don't have time" is a sentence that doesn't make any sense. Any of us has 60 per hour, 24 hours per day, and 365 days per year, and it is all about the priorities we go for. So let's go to the next one, as Elon Musk and Donald Trump is a pro-Bitcoin, and need to know those news. Bitcoin looks primed for another run towards 65,000, and ideally it would break that level and make an attempt over 70,000 before back testing the Fibonacci extension. You can't be late to Bitcoin, but right now you're extremely early. 450 trillion in global store value, as Bitcoin market cap is only at 1.2 trillion, which is the current adoption is at only 0.26%. But Bitcoin could crash anytime soon, and here's why it could actually happen. So Bitcoin reached a new all-time highs across the several currencies, with over 40% growth in the past months alone when measured in dollars. So the cryptocurrency's 2021 intraday high of 69,000 could be seen once again soon. And the reason behind the current growth is the growth is being fueled by the approval of Bitcoin spot exchange traded funds in the US and expected changes to the way Bitcoins are created and mined that will take place at the end of April. And according to data from the blog, about $70 billion has been invested in spot Bitcoin exchange traded funds since they became available in January, and the rising demand from buyers anticipating the next halving is why crypto bulls are predicting that Bitcoin prices will soon exceed 100,000. However, a closer look at this bullish target reveals some skepticism, as JP Morgan estimates that the current cost of production, which is mostly the electricity required for the computers that perform mining calculations, is about $27,000. So this serves as a price floor for Bitcoin, and immediately after the halving, this cost will temporarily increase at around $50,000, and the current market euphoria is pulling the price of not only cryptos but all the assets like stocks and commodities. So Bitcoin is bound for deflationary bias, and according to one of the popular articles by O. Castellana, Bitcoin's creation has a fundamental flaw, as the supply of Bitcoin is artificially capped at 21 million and a design lacking economic sense. An economy requires as much money as transactions and activities that occur within it. Thus, if many people start paying over the Bitcoin network, the value of Bitcoins will need to rise or at least remain at high levels to accommodate such demand. And if the number of Bitcoin transactions continues to increase but its currency's amount ceases to do so because it has a ceiling, then it will suffer from deflationary bias. This means that each Bitcoin will be revalued too much and the prices of goods nominated in that currency will fall, and which is not positive for economic activity because the limit of Bitcoins will limit its circulation, as many people will stop liquidating it believing that it will only go up. So this will cause a liquidity crunch, and in the longer run the exchange market will be left to dry. All that money needs to do is provide a stable index of value for any and all goods available on the market. Fiat currencies such as the US dollar are excellent at this, and they also serve as a legal tender backed by central banks and treasuries. Summary we got is investment in spot exchanges traded funds are on the expected changes to Bitcoin mining at the end of April are driving its growth. Crypto bulls predict that Bitcoin prices will exceed 100,000 due to the rising demand from buyers anticipating the next halving. However, Bitcoin's artificial cap of 21 million coins has been criticized for lacking economic sense. That's all the information we got on today's video, so don't forget to subscribe, like, and share. See you in the next one, and peace.